This week, Ben and I are going to talk about the WASD updates that USDA made, along with some Chinese exports discussion and a little bit of a look at continued inflation pressure. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing great. How are you this morning, Will?
Doing all right. Had a recent trip to Oklahoma. Just went on, saw some pigs in the arena, some good show pigs. But I guess otherwise, other news. The Royals season over. So I guess those are
Yeah.
the things to talk
Yeah,
about.
it was a great season. I got to go to the home game last Wednesday. They lost, but it was just an amazing playoff atmosphere. And, uh, it's those type of games that you dream of experiencing someday. So I've been very fortunate. I got to go to the playoff games in 2014, 15, and now here again in 2024. And it's a lot of fun. It's just this is the dream for baseball fans. So
Yeah, there's something about October baseball where it's just that much more special.
sure.
But talking about some letdowns, Ben, we have a lot of drops within the market. So let me get to those. Quick rundown.
I like the segue there. That was an interesting way to do a segue.
Yeah.
So good job.
Looking at December corn down 18 cents at 408. December 2025 corn down 13 cents at 442. November 24 soybeans down 38 cents at 996. November 25 soybeans down 38 cents, or excuse me, down 33 cents at 1047. Soybean oil on a cents per pound basis is down 2.67 cents at 41.90 cents. Soybean meal on the short ton for December down $9.30 at 315.50. The December wheat crop down 7 cents at 585. December cotton is down 2.5 cents at 71.03. And then that West Texas intermediate crude oil contract down $3.29 a barrel at 73.34. So Ben, a lot of losses, widespread, but also on the input side. So maybe a little bit of help there as well.
Sure. So, it's very humbling to be a market economist sometimes, or an economist that works in commodity markets, because um, we truthfully, there's things that happen that we don't anticipate. There's always a wide range of things that can impact markets that are statistically possible but unlikely, and then they rally the markets. The reason I bring this up is because at the end of August, I was doing some field days across Missouri, and frankly, I was pretty bearish the soybean complex. We had just had the crop progress tour at that point, and they had found just huge number of pods on those soybean plants, and I was really worried about that soybean complex, and so I said some things during those field days about soybean futures markets maybe even going down and hitting the $8 mark, and it was not too long after that, just about a week after that in September, that the market rallied like $1 plus in the next couple of weeks. And so I started getting emails from producers saying, do you think it's still possible that soybean markets could trade with an 8? And my answer was yes. It was still possible, even though we had rallied that dollar and gotten up over, in the mid $10 range. And now we've had some technical breakdown in soybeans. We've fallen, all the way below $10 on that November 24 soybean contract. That's not including the drop we had overnight last night. We're down 10 cents already this morning. We'll see how today goes. But long story short is, like, I don't like seeing prices at this. My dad and family is a soybean producer, and so I don't like seeing soybeans at this. But I think we have to recognize just the amount of soybeans that are currently available on the world market, and that's going to justify lower soybean prices.
Well, talking about getting a snapshot of the amount of supply out there, USDA had some adjustments within their October WASD, their supply and demand estimates report. They increased the yield expectations for corn, which was outside expectations. There's a decrease expected to that. Soybeans was decreased just slightly there. So Ben, how much of a shift does this give the supply and demand picture?
Well, in a lot of ways, the October report was rather neutral for many of our commodity markets. You mentioned that the corn yield increased when the average trade guess was a decrease. Frankly, that small decline that was expected ahead of the report on corn was a little bit of a surprise to me, from the standpoint that a lot of the folks I had talked with were expecting a larger corn yield number in that report, and that's exactly what we got. But as you mentioned, the average trade guess was a little bit lower. The soybean number coming in, just a tenth of a bushel lower was kind of within the realm of expectations. And so I guess I sit here and say, like, if I'm looking at the entire balance sheets for corn and soybeans as a whole, definitely, not the report did not surprise to the bearish side, which I think was the concern. But I don't really think there was anything in there that was overly bullish either. We could pick a lot of numbers apart here, but the fact that Chinese corn demand was lowered 2 million metric tons, that is a concern, I think, on the corn side as we look ahead. The fact that I think the soybean balance sheet domestically for demand is maybe overstated is a little bit of a concern as we look ahead. And so those are bearish factors. On the bullish side of the thing, the soybean crop's not completely out of the field yet. I think there's still some opportunity maybe for a little bit of deterioration in the soybean production numbers, but overall, a pretty neutral report from the corn and soybean side at least.
Well, Ben, I want to shift gears a little bit. Over the last several months, we've been talking about some of the struggling aspects on the export front. But on Twitter this past week, we had a little bit of interaction talking about some sorghum things. Asking for more sorghum discussion. And sorghum's been a general bright spot within the export market. The U.S. has been sending a lot of grain sorghum to China and some other markets as well. Ben, what's the current picture on the grain sorghum front, and what are your expectations moving forward into the new season?
Well, so of all the crops that we talk about on this program, so primarily wheat, corn, sorghum, soybeans, cotton, and rice. We also talk about soybean meal and soybean oil too. But those six commodities. Out of those six commodities, sorghum, or milo, as we call it in Missouri, is the only crop that is actually expected to have a stocks to use ratio decline in 2024, 2025 relative to the year prior. Okay, so let me put this into perspective. Soybeans, we've got a 50.6% increase in that stocks to use ratio from 8.3% last year to 12.5%, right? So growing stocks relative to demand. Corn up 12.5%, so going from 11.8% up to 13.3%. Cotton up 34.8%. So again, growing stocks pretty much across the board. The only commodity is milo. Milo is the only commodity where we see basically a flat picture, but if you actually do the math, it comes in a little bit smaller in 2024-25 relative to the year we just had. So right around 9.8% stocks to use ratio. So that market has tightened a little bit, or is expected to tighten, and part of this is driven by the demand that we've seen the last year and a half in the export market. So in the U.S., grain sorghum is primarily used for feed, and we do produce a little bit of ethanol. The fact that we've seen strong ethanol demand, at least over the summer into August, maybe a little bit of softening as the calendar has turned here to October. But the fact that we've seen strong ethanol demand also increases the demand for ethanol produced from grain sorghum. So not just corn, but also grain sorghum. So that's been a positive. But then the big category here is on the export side. We export a lot of grain sorghum. It primarily goes to really two markets, but we could throw in a third. So primarily China, followed by Mexico, and then usually some African countries. So if I put all of Africa together, they're kind of the third market there for grain sorghum. And it's been the growth in exports that we've seen of grain sorghum into China that has allowed the grain sorghum market to kind of outperform a lot of our other commodities. The question becomes, will this continue, right? I think that was probably the question you were going to ask me is, does this continue? And I would say that when I look at the prospects of it continuing, Australia and Argentina are our two biggest competitors of grain sorghum into the Chinese market. When I look at both of those countries as we head into the new marketing year, both are expected to grow their share of global exports because they are expected to have larger crops, right? Argentina is increasing their production of grain sorghum. We expect to see a better production year, not as dry conditions out of Australia. So I do expect more competition in the global market. We're going to have to fight for that, and probably that's going to mean that we're going to have to lower prices to be able to get into the Chinese market for exports. So I think a little bit smaller demand as we work our way through the growing season. Still relatively tight supplies of grain sorghum, but we're probably looking at some of our better prices early in the growing season rather than later in the growing season.
Yeah, well, Ben, looking at the 2022 to 2023 and then the 23 to 24 marketing year, you saw, as you put it in one of your weekly write-ups, talking about Argentina and Australia's exports, a pretty steep decline compared to their average numbers, looking year over year. So just seeing that likely to bounce back, maybe moving forward into this current and over the next marketing year. Ben, looking forward into things that farmers and ranchers should really be paying attention to. We got some new numbers out of the CPI and PPI. So looking at some inflationary pressure, the consumer price index came in a bit above expectations. So just Ben, real quick, looking at maybe inflationary pressure, is this going to have any, strengthening impact with that CPI increasing?
Yeah, so this is a good question. So, the both the CPI and then also to some extent the producer price index. So this is the inflationary signals that manufacturers and producers of products, right? Those intermediate steps, right? Like their prices also increased, month over month, and relative to the year before, both cases we saw higher reported values than what the expectations were. So both for the CPI and the PPI, the value came in higher than expectations. I get a little nervous saying that this is a reignite. The inflation's reigniting. Sorry, I'm struggling over my words here, but like I get too concerned to say that we're seeing a reigniting of inflation, because we always knew that this last mile, or whatever you want to call it, this last part of the equation of getting back down to 2% inflation was going to be the hardest, and it's going to come with ebbs and flows. And so if we see a couple more months that look like this, then I think we need to be concerned that we're going to have to see interest rates rise again to kind of tamp down the expectations of growing prices. But at least for the time being, I'm hoping that this is just a short-term blip and that we continue on the path of moderating prices.
Well, you almost look at it as a weight loss program, right? If you have weight you're sitting at and then a goal weight, those first few pounds come off the quickest. And then once you get down lower, a little closer to your goal, it gets a little bit tougher. And then, any little step back will pop you up a little bit. So, just a little, similarity there. But Ben, looking forward into the rest of this week, what should farmers and ranchers be paying attention to that could move the markets?
Yeah, so it's a rather quiet week for us, in this program. Next week we do get some kind of what I assume to be the final crop progress numbers for this marketing year. Just given how fast harvest has progressed, I look for either this week or next week to be the final week of harvest crop progress and harvest numbers. Cotton Jennings do come out next Tuesday at 11 a.m. as well. So that'll be something to pay attention to in the cotton market.
All right. Well, Ben, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.